Feast or famine? That's been the flavour of this year's company earnings deluge, and today was no exception. Qantas took the prize for the biggest annual loss today, but it's not the worst this year, and it lost more last year. Woolies, on the other hand, delivered a 78% lift, while A2 Milk went backwards by a similar amount. Elsewhere, banks and miners found themselves out of favour, forcing the market into a retreat. The dollar was in a holding pattern for most of the day, and commodities were mixed. Overseas, Wall Street drifted for most of the session, but a late rally put it further into record territory, while regional markets headed south on concerns America's central bank may begin to wind back its massive stimulus program when it meets tomorrow. The virtual meeting in Jackson Hole in Wyoming has been a source of uncertainty for weeks, as bullish inflation fears have given way to worries about an economic hit from the Delta strain. Now, if you're puzzled why property and stock markets have gone crazy during a recession and a pandemic, this graph might shed some light. A decade ago, during the financial crisis, the world's biggest central banks resorted to printing money after interest rates had hit zero. Now, as you can see, the more they printed, the more Wall Street loved it. But whenever authorities tried to wind it back, stocks tanked. So when the world went into hibernation last year, the US, Japan and Europe had no option but to really ramp up the stimulus, sending markets into orbit. Will the US Federal Reserve slow down the printers tomorrow, even by just a touch? Probably not. But it's ramped up the fear factor on global markets, which begs the question, is it COVID and recessions that worry investors, or the thought of being weaned off the medicine? And that's finance.